Following last week's inflation data, I've seen some knee-jerk responses from people that believe that the UK house price crash is now cancelled, that the Bank of England are going to slash rates, mortgage rates are going to come tumbling down, and that house prices are going to soar from here. Now, I do not believe that that is the case, and in this video, we're going to look at some of the evidence as to why I think that we are far from game over and that we are just at the start of a much bigger correction. So, following last week's inflation data, that showed that the government had hit basically their false target of halving inflation this year and then pretending that they'd actually done something that had contributed to that when we all know that clearly wasn't the case. Despite all those celebrations, inflation is far from beaten. I'm going to come back to that in a moment. But firstly, I just want to read this post to you. This is from the House Price Crash Forum, which is one of the most bearish places you can go on the internet to discuss UK house prices. And this person made this post last week. This is actually before the Bank of England released the UK inflation data. This was following the US releasing their inflation data, but it goes hand in hand. And I just want to read this out. And this isn't to pick on this person because I can completely understand that people that are looking at the headline figures that are being released by the house price indices and looking at the inflation data and seeing how the government's responding could easily think that there's no need for a crash anymore. Things are going to be absolutely fine. But either way, I'm going to read this out and then we're going to go through and look at all of the data that suggests the opposite to this post. So today's CPI, so the inflation data, signaled the beginning of the end. It's not going to happen. He's referring to a house price crash. The Fed are done, and that means the Bank of England are done. So the Fed are the American equivalent of the Bank of England. It's going to be cuts in 2024. That's referring to interest rate cuts by the central bank, which would have a knock-on effect on mortgage rates. There's too much cash spilling around the place. I completely agree with that. There is so much money being printed that it is literally everywhere. Even if we hit recession, I don't think it will have a macro effect on property prices. I do disagree with that, as if we do go into a full recession, we're going to see a lot of job losses, and that will have a self-fulfilling effect on pushing down house prices. The K recovery is crystallizing to me. You just have a smaller groups of haves and a bigger groups of have-nots. I was sure this time it would be a proper 30% correction, but I'm wrong. So when he's talking about a K recovery, he's talking about them going in different directions. So the haves are going one way and the have-nots are going the opposite way. I think nominally this will be the bottom. Someone today somewhere got a bargain today and the price will be 10 to 12% off peak. Sorry, gents, those hoping to finally get that bargain, having waited 20 years, are on the losing side again. And I can completely understand why someone may feel this despondent based on what is happening and how slowly really that house prices seem to have fallen over the past 12 months in the face of very, very high inflation and also the UK economy struggling generally. But I still think it's just a matter of time and it's just more patience is required. And if we come down, he's not alone. Yes, think you are right. I wouldn't be surprised as soon as they cut interest rates, house prices jump by 10 to 20%. I'm not 100% certain whether this person's been sarcastic or not. It's hard to tell. And the next person is the opposite side of the fence. While I think rates will be cut next year, I think people are fundamentally poorer. So I can only see prices continuing to fall. And I think that's a fair stance as well. So let's come back to inflation. So this is how it was reported last week across the majority of mainstream media outlets. Inflation slows to 4.6% as government says pledge met. Now, we all know that is a load of garbage and the government did absolutely nothing to bring inflation down. But to be fair to the BBC, further down in the article, they do go on to explain that and that really the government shouldn't be taking credit for that. Now, the other way of reporting this, because inflation is far from beaten. It is far from beaten despite the fact it might be hitting the government's own created target of halving it this year. We are a long way from where we need to be. So it could easily have been reported like this. We could have seen prices up another 4.6% following last year's 10.1% increase. Or we could also have seen inflation 130% above target as prices continue to soar. So inflation is far from done. If you put aside the fact that inflation came down quite sharply last month due to the energy price cap lining up where it was last year and the decrease in comparison this year, things haven't moved all that much. And the next legs down are going to be a lot harder. Now you haven't got that big correction that we've had over the past month. So I think people that think the Bank of England are going to suddenly slash rates all the time we're still 130% above target need to be more open to the idea that the rates are going to stay higher for longer, because if the Bank of England does their job properly, they're not going to consider cutting rates until we're back below the 2% target, and currently we're at 4.6%. So there's still a long way to go. The other thing to keep in mind with this is the base rate is at 5.25%. Now try to just forget where we are now and think back where we were 18 months ago. If you'd have told people that base rates were going to get to 5.25%, a lot of people wouldn't have believed you. And if you'd have asked them the question, do you think the housing market can survive this? I think the answer would have been fairly unanimous. They would have said, no, it won't. And even the country is struggling. If you look at how much interest we're paying on the debt, last year it's going to be over 100 billion. That's more than the education budget. So the UK economy and the UK housing market is in big trouble, even though inflation is coming down. This base rate is here to stay for a while, and even if they do start cutting it bit by bit, it's going to take a long, long time for them to bring that down to a level where people may feel that house prices are really going to start to take off again. As for the actual inflation data itself, I don't want to get into this in too much detail, as a couple of other good YouTubers have covered it really well over the past week, so I don't want to repeat what they're saying. But we can clearly see that although overall inflation is coming down, this blue line here, which is owner-occupier costs, so basically homeowners, look at that inflation. That is still heading up. So overall inflation is coming down, but the one that's going to impact homeowners the most, that is still going up sharply. And if we come down, there is another table which shows this in much clearer details. And you guys have probably already seen this in other videos from other YouTubers. If I can find it, it's a long way down on this page. Here we go. This is the one to look at. These are the contributions of housing components to the annual CPIH inflation rate. And if we look at this blue bar here, you can see is the only reason it's gone negative. And sure enough, that is electricity, gas, and other fuels. If you look at the purple bar, which is owner-occupiers housing costs, that's including your mortgage, because all of these people that are remortgaging from low rates to these higher rates, we're seeing this source. So once you take out this blue bit out of the equation, things are not looking good for inflation. And even if you look at some of the headline figures, I've put in red here the ones that have either barely moved or haven't gone down at all. And there's quite a lot of red still in this data. Look at food. Okay, food has come down 2% since September, but still 10% above where it was last year. 10% food inflation is a disaster. There's nothing to celebrate about that. Alcohol and tobacco, 11% fine. You can say that is more of an optional expense, well, for some people at least. Of which owner-occupier cost has actually gone up. So although overall housing has come down because of that energy decrease, of which owner-occupiers housing cost has actually gone up. Health, basically not really gone much at all, from 8.4 to 8.2. Communication, again, sideways. Recreation and culture, up slightly. Education, up slightly. There's really not a huge amount in this data to sit there thinking that inflation is done and that the Bank of England can suddenly turn around in the next few months and say, right, we can start slashing rates. It's just, the data just does not back up that theory. And we can see how this is impacting retail sales, and sales or consumption in the UK is a massive part of GDP. It's about 60% of our GDP relies on consumption. And we can see here, this is what has happened to retail sales in the UK. Now, while the value of the sales has gone up because of inflation, the cost of everything has gone up, the volume, the actual number of products, the units being sold, has come down. Now, if you need to manufacture less goods, that means you need to employ less people. And if there's less people employed, you're on your way to recession. So this is why this is so important. You might be seeing some of these big corporations still reporting really healthy profits because they're benefiting from this higher value. But when we actually see that people are going to start being made redundant because we don't have to produce as much because people aren't buying as much, that's where we're going to see the real knock-on with the economy. And of course, that will filter through to house prices. We're also seeing this with GDP. We are basically sideways. I think there's some data here. Where's the paragraph highlighted? Looking at the broader picture, GDP showed no growth in the 3 months to September 2023 when compared with the 3 months to June 2023. So over the past 6 months, there has been no growth in GDP. That is a worrying sign for the UK, especially for an economy that has printed hundreds of billions of pounds over the past couple of years and also has mass immigration as well. If you're doing all of that and your GDP still isn't growing, something isn't right. We've then got pay. This is actually one of the slightly more positive things in this video. We can see that wages have finally overtaken prices. So people aren't getting poorer for the first time about 2 years. But again, this isn't all of a sudden going to fix the economy and fix the housing market. People were getting poorer for the best part of 2 years, from mid-2021 to mid-2023. So this little swap over here isn't going to solve the problem. And we can already see it looks like potentially that wages are topping out a bit. So it wouldn't surprise me at all if all of a sudden wages started chasing prices down. But we'll see how that plays out. And everything that's happened over the last year, I think a lot of us, including myself, have been quite surprised that it has moved a bit slower than we expected. But we are starting to see now that reflected in the data. This is data from the ONS, and this shows for the first time, let me make that a bit bigger and hide the camera so you guys can see. For the first time in 11 years, I know it's only a tiny blip, but you can see for the first time in 11 years, the ONS Land Registry, the official house prices have gone negative. And remember, they lag by a good 6 to 7 months. So it's a matter of time before this goes even lower. And also, we're starting to see sellers starting to get a bit more realistic. You can see the red line here. This is sellers asking prices. They've gone negative as well. And last month saw a substantial drop in Rightmove on a monthly basis in seller asking prices. So that is showing that sentiment is definitely starting to shift in the market. And one of the reasons for this is the housing market is grinding to a halt. This is mortgage approvals. You can see we're down to just over 40,000 mortgage approvals. And I can see that dropping even lower in November and December. And that is down substantially from around about 65 to 70,000 that we've seen over the many, many years preceding COVID. And then obviously we had the crazy couple of years here. But we are well below where you'd expect to be in a well-functioning market. On top of that, we also know that supply is increasing. It tracks the Rightmove number of listings. We can see things have increased sharply over the past year or so. We have seen a slight peak at the moment, which is probably frustrated sellers thinking, do you know what, I'm going to take my house off the market over the Christmas period, then try again in January and February for the spring boost, the spring bounce, and I'm going to get a lot more money for my property next year than if I sold it in November or December. Of course, we know how wrong they are going to be. Also, mortgage rates have actually come down from where we were. And I was looking this morning, the best mortgage that you can get, I would say at the moment on a 2 to 5 year fixed, is around about 4.6 to 4.7%, which is a lot better than where we were maybe a few months ago or this time last year. So mortgage rates have come down. So a lot of people are looking at this thinking, right, this is a catalyst for the housing market taking off again. But you still have to put this into perspective. Who are these mortgage prices coming down for? Because anyone that's taken out a mortgage at the moment, other than first-time buyers who don't have a mortgage, anyone that's remortgaging at the moment is remortgaging from a much lower rate. So although the headline averages are coming down, people's costs are still going up. Mortgage costs are not coming down for anyone, other than maybe people who decided to go onto their standard variable rate for a bit at maybe 7 to 8%. I think maybe now's a good time they're going to fix up again at maybe 4.5%, 4.6%. But if we compare this is an example I've got here on a £225,000 mortgage. So this is based on a £300,000 property with a 25% deposit. On the previous rates at 2%, it'd be £954 per month. If we went on to the new rates, about 4.6, that's providing you've got a perfect credit score, you can get it for £1,263. So about a £300 increase per month. Now put that on top of your energy bills up around 50% over the past couple of years. Your food bills up a massive percent as well. And general inflation everywhere up massively. Plus don't forget you've been getting poorer for the past 2 years because inflation's been outstripping your wages. Who is this good for? It's not good for anyone. This isn't going to fix the housing market. This isn't going to fix the economy. And all of the things we've just spoken about are all headwinds to the housing market and the economy. And don't forget, a lot of the stimulus has gone as well. So Help to Buy, that ended earlier this year. Help to Buy is gone for good. Well, I say gone for good. You never know what the government or the next government may announce in their budget. We're also seeing an end to quantitative easing. The race for space seems to be over. No one's really interested in trying to relocate to the country anymore. Work from home is also being wound down. Less and less people are working from home. The COVID handouts, most people have spent that money as well. So a lot of the stimulus that was there. Also, don't forget the buy-to-let. There was a lot of push for buy-to-let, and with the cheap mortgage rates, there was lots of people becoming landlords. That stimulus has gone as well. So we've got massive amounts of headwinds. We've lost a lot of stimulus. The UK housing market crash is far from game over. We are just in the early stages, I would say, and we've still got a good couple of years to see this fully play out. Now, if you want to see my latest thoughts on the housing market, I'm going to pin a link to my Twitter account in the pinned top comment. And if you want to know why, that despite all of this doom and gloom, I've actually started viewing properties in the past couple of weeks, I'm going to pop up a video now and I'll see you guys over there.